My view on the middle market is, frankly, it's super competitive. It's like unbelievably competitive. It's more competitive today than it was 5 years ago. And it's, more competitive than 5 years before that. There's new PE funds being formed every single day. And so I think it's just incredibly important that you try to find a seat where you have some sort of, edge or advantage, where you or your team can rise above the rest. Too many firms just simply compete on price and leverage, and they don't do well in the long run. And so, I've structured my career around that advice. I mean, Goldman is obviously differentiated because it's Goldman, and we can get meetings with whoever we want. And if it's a tie, we're going to win. But also at Goldman, I had, a really, sort of interesting capital advantage where we could do anything from first dollar senior loans to buying whole companies and everything in between. So we could, had all these sort of products that companies might need that other people couldn't do. 9 out of 10 PE firms couldn't do the types of structured deals that we could do. So that gave us an advantage as well. Same thing at Macquarie to a lesser extent than Goldman, but had a brand name and had this really flexible balance sheet. We also had really low cost of capital at Macquarie, which was an advantage. And then when I moved to Pine Island, I've already described it a bit, but I think our partnership group is incredibly unique. There's really nobody else out there that has a group that looks like ours, with the possible exception of Carlyle, and I'm happy, being in that company. So, I've always tried to make sure that I'm, somewhere where I feel comfortable that I can utilize, I can sell that advantage or that edge that the platform has. And I think that's really important when you're thinking about, if you want to get into middle market private equity, think about where you're going and why it's a good fit for you, and how you can exceed there, because a lot of it is very undifferentiated.